All right. Hello, everyone, and welcome back to another Pepperstone live event here on YouTube. It's an exciting day because it is CPI day, FOMC meeting minutes. And of course, at the end of the week, we kick off with earnings season coming back with the big banks in the US. My name's Thomas Atkinson, and as always, I'm joined by Tyron Abella. We're starting to see some vol coming back through, which we anticipated last week, Ty. Things are getting exciting.
Yeah, hello everyone. Yeah, look, earnings starting is always exciting, and I think the market's certainly poised for a move one way or the other. Like it looks like it wants to sell off everywhere, but it's been very, very resilient. So I think we're waiting for really earnings to kick off properly. The next week or two is going to bring some very interesting trading. So looking forward to the next couple of episodes, Tom, to see if we can identify some trend finally.
Yes, as always, we'll be going through the S&P 500 major indices, of course, currencies, commodities, and a little bit of crypto discussion tonight, along with Tyron and myself's top picks of the week. We always have one that we like to show, and I think we've got some doozies tonight, so it's going to be really great. We'll see you in just a moment, and remember, put comments in the chat down below if you want questions answered, because we do that at the end as well. See you in just a moment after this quick disclaimer. Okay, so Ty, we start with the S&P 500 this week, and a very, very interesting point on the charts. We'll just quickly grab down this this Fibonacci we've got here on the chart, because we've gone from a high to a low that was a 61.8 switch, and we've also closed below the all-important daily 20-moving average at one point, with a huge sell-off that actually happened after our last week overall discussion. We always do these on Wednesday at around 8 p.m., I think Australian Eastern Standard Time nowadays. And if you want to, also links in the comment section down below, so that you can subscribe if you'd like attending these. But right after that, we said vol was probably going to spike up, and it did in a big way, because we got this massive candle here with a huge sell that's since been a little bit recovered. And we trade around now the most traded zone that we've been here pretty much now over the last week. So it's all about CPI, FOMC meeting minutes, and earnings, isn't it? A big breakout either way, I'm thinking, starts there. But with a high, low, a higher high, and a lower low, who's in control of the smaller timeframes at this stage, in your opinion, Ty?
Yeah, look, I don't think really at the moment, I think the buyers and the sellers have got it completely even, if you ask me, because I know, look, every time they've tried to sell it, you'd have to say the buyers are in control probably more than the sellers, because really they've been able to pull it up above the 20 moving average again, which did surprise me a little bit, because after last week's candle, we saw a very, very big sell-off. And the fact that they were able to get it back above that 20 moving average probably did surprise me a little. But then when we look at the time of year that we are in, just approaching, not quite the halfway mark of April, but close enough to the point where we do start to see that candle there, the one that we've just highlighted, that below the red line, which is the 20 moving average, probably I thought it might have, that was the first close actually, Tom, in many, many months. The first proper close of a 20 moving average. Yeah, since basically October, is it? Or November of last year. So it was very significant in the fact that it actually closed underneath the 20 moving average. But look, we know that we've got resistance here, and it's resistance that's only just been formed, right? Like we're at all-time highs, so it's not like we're going back 2 years to try and find where the problems are. These problems are being effectively created as we do these webinars, because these highs were only just reached. So I think there's probably, in recent memory, I don't think there's been a more important earnings season and announcements over the next month or two, because we know that we're heading to the sell in May phenomenon, as we always talk about. The seasonality that plays out around May and late April is uncanny how often it does actually happen. So whether the market can actually maintain its levels above the 20 moving average until then, or we start to see weakness prior, you'd be very, very brave to be going against the seasonality this year. Let's just say the earnings would want to be shooting the lights out for us to see all-time highs and continued strength through what is generally a weak time of the year.
Yeah, so let's talk about Q earnings, because of course the expectations are not that high from the street from the S&P 493 stocks, but they're very high for the Magnificent Seven, or more importantly, probably the Mag 4 or 5. So it's going to be a lot of focus on AI, a lot of focus on the major stocks, which we'll look at a little bit later on. But for me, the thing with the CPI number is let's look at some key levels. So I've mapped out a couple for us. So let's grab them onto the charts here. And what you'll notice is that we traded actually now the most traded zone across the recent action. We also find ourselves at some resistances and supports. So you'll notice here I put Wednesday and Thursday core walls. Now they're between 52.50 and 52.60. Effectively, this price up here is not only previous resistances on the charts, but it's also a bit of options that are going on up there. And then we have a put support that's sitting around the 51.75 to 51.50 level. So effectively, the market is trapped within two major zones, trading at what you would call is an equilibrium for now. Which decision is made? If the market ends up going above 52.60, I think it's clearly making that decision that maybe there's a little bit more longevity in the market's tie. 5,300, 5,350, and 5,400 become the next major targets from most traders' perspectives. And if we do end up getting underneath 51.50, I think that's actually a sign that the bears are really more in control of this market. So from how I look at it, it's long on dailies, long on weeklies, long on monthlies. Of course, all of those are quite bullish. But the smaller timeframes, the 4, the 2, and some of the others, that's where you're getting that sequence of a high, a low, a higher high, and then a lower low. And it's the first time in a long time we've seen this sequence. So let's just quickly zoom back and show you what we've been talking about. Here we had a high, a low, a higher high, higher lows, higher highs, higher lows. Again, over here, the same type of thing. Again, over here, we found demand and we found structure. So it's really been since January of this year was the last time we actually got any type of weakness in the markets. And that was literally there. Before that, and after that, there's been not one sign of weakness in this market. So clearly volatility is here. And that's good for all of us because it's giving us opportunities. I think CPI and FOMC meeting minutes today, though, will at least activate this market in more ways than one. So it's going to be quite exciting. Let's move over to a couple of other markets because, as we always say, Ty, it's worth looking at the NASDAQ and the US 2000. You love the Russell. I'll do the NASDAQ quickly here because I've got a couple of key levels again that we are watching this week. And the market has been dull. Now, that effectively means we're getting higher highs like here, but they're only just barely making higher highs. Now, some people would call this an accumulation or a distribution zone. I would agree with them that, again, it's a coiled market. And when we have a coiled market, it might look quite boring, but what it's actually allowed is the reinflation trades to come through. So not so much NASDAQ trades, but things like gold has been going really well. Oil, which we've been talking about in these live streams, has been going incredibly well, and a few others as well. Anything to do with really inflation is going very strong, and metals and energy and commodities at this stage. But if we manage to get below the 17.8 level, you'll notice this is 1, 2, 3, 4 trend line and a fifth period. So I think this is where the bears start to take control of the NASDAQ. And from a bull perspective, Ty, if we go back to the daily on the Pepperstone CFDs here, you'll notice that there's a lot of wicks. Now, we always mention these wicks because wicks hold orders or excitement of the market. And you'll notice that we have a lot of rejections off this level, which is starting to make me think that the 18,400 is actually a massive resistance. And if that is closed above, we could be seeing some green sky above, Ty. So I think they're the two major levels for me. Would you agree that these are the two major zones for you as well?
Yeah, that 17.8 needs to hold really for this market to continue strength. If it gets broken through, I think there's a lot of downward pressure that could probably take it down a lot more than people would probably realize. Remember, we've talked about some of the stocks that have actually got it here in the first place are already on the decline, really. So, you know, it can't rely on Apple. It can't rely on Tesla at the moment. It can't rely on a lot of these, big stocks that got it there in the first place to actually prop it up. So if it does start to waver and start to push down, there's not a lot there to actually catch it. And I think that, you know, it's even everyone's darling Nvidia. Like if you just got it up on the chart now, even it's starting to look a little bit dodgy, isn't it? Like it's and look, let's not forget, we say it every single week. It doesn't mean it's market Armageddon. It doesn't mean that it's GFC Mark III or anything like that. It's just a healthy pullback. It's what we need. The market needs it, and if it happens, it's just going to create better opportunities to actually go along on a lot of these good stocks and a lot of the key indices, of course.
Yes. So I think look, we've been talking about NVIDIA for a little while on the show, and I've mentioned this stat before. Semiconductors are only, I think it's statistically over the last 10 years, are only 30% up for the month of April. So it's actually a pretty bad stat for semis. And it comes off, of course, this huge sell signal over here, which was then rallied and dropped back down. So it's what we call a pullback in time, or even a pullback in the market price at this stage. I think it's taking a breather. The hottest stock has become a little bit too many people talking about it. And that usually means that new price exploration can happen to the downside. At the moment, it's holding the big support of 850. If it does manage to go a little bit lower, we could be going down to the 780. And of course, a lot of people's dreams, Ty, would be like the 680. And that would be a gap fill on the market. So NVIDIA is what everyone's talking about, no doubt, because of the AI revolution. But at this stage, it is looking a lot weaker than it was. For bulls, you'd be wanting to look at new higher highs, considering the last 24 hours. So it'd be looking towards markets moving above 890 to really signify, I think, the more day traders and the momentum-based traders coming back into this market. So NVIDIA is just a symptom of already noticing weakness in markets. And the same thing's been happening with Apple, as you mentioned. This stock is at, really a very, very key level. It's been having a lot of daily rejections. It's found heaps of support over at the 168 zone, 169. And if it doesn't manage to hold this level, it could be a bit of a canary in the markets, kind of like NVIDIA's being, and we might be actually seeing some sell-off. And of course, we have highs here. We have the overall support, and some people would call that a massive double top pattern. So if it doesn't hold and it keeps going down, it may be a bigger sell-off than some people expect. But either way, I think Ty and I are of the opinion that it's going to be most likely an opportunity for a lot of us out there, especially if you're a day trader, swing trader, or even somebody that's looking at the longer term. So yeah, Apple, NVIDIA, certainly in focus. Stocks that are doing really well, stuff like Google's been doing incredibly well, breaking out to new highs. Some massive news coming out about this potential competition here so that they actually have something that's pseudo usable compared to just NVIDIA's chip offering at the moment. Ty, the news broke on that in the last 24 hours. And obviously it's a totally different pattern to what we've been seeing on the other two. New series of higher highs. And at the moment, Amazon, Google, and some of those other bigger stocks are doing better. But as we mentioned, it's always important to look at the overall picture. So let's look at a couple of commodities that have been steam training that we've discussed here on the show that we do on every Wednesday. And this was one of the majors. Of course, I've been incredibly bullish on gold, and I could see that gold may run out of steam. I'll actually switch over to this one over here just so you guys can see it. Where is our gold? Here it is. Oh, no, this is the discussion I wanted to have. So gold's been incredibly bullish, and I do think that it's starting to get to a point where maybe it's a little extended. 2,300 was one of my major day trading targets. I've got major levels above that. My own personal opinion, gold might even be able to get to, some serious levels over the next couple of years' time, maybe even 3,000. Obviously, timing will be everything on those types of things. But we've been talking about this for a long time. It's come through energy, gold, metals. That's been the trade. Do you see this as being a real warning sign for the CPI that's about to come out, or is it just more rotation and they've been behind for too long?
I think it's a little bit of both. But look, gold's been its own beast for quite a bit now. And really, when it's going into all-time highs like it has been doing at the moment, I always like to go back to the technicals. And the technical wave are generally equal, as we know. So the wave that it's just completed is equal to the wave that broke out of that resistance. So realistically, when you see that the level has actually been reached like that, it's pretty much spot on at around the 2350. It always makes me, well, not so much nervous. I think really, if you're long gold, you probably should be out by now, really, because you would have got it at a pretty good level. I don't think you would have jumped in $50 ago. I think you probably would have got in about $150 ago. So in reality, you probably should already be out. It doesn't mean that it's not going to keep going. I mean, of course it can, but I would probably expect to see either some sideways action here, or maybe even a little bit of a pullback to probably just let it consolidate a little bit. I would be surprised if I woke up tomorrow morning it's a 2,400. But in saying that, gold can do amazing things. It's there's a very good reason why you keep so much of it under your bed, Tom, and believing it's going to $3,000. So that's true, right?
No, actually, I'm scared to hold bullion personally, Ty. It gives me the heebie-jeebies. It's like those people that put it in their backyard and then bury it and then forget where it is. Yeah, no. For me, it's always been about holding it through a mixture of different things, whether it be
Yeah.
gold stock or gold ETFs or anything like that. But yeah,
I
I
think
can see why
I
you
think it
might
is
think that.
level. Yeah, and if you like, just subscribe to Tom's OnlyFans, and you can get his address, and you'll know where you can get the gold. Look, I think that 2350 for it though is probably a target that a lot of people have probably aimed for. If it goes past there, I'd start to be probably a little bit concerned on holding those longs, because I think the return can be quite significant, and that's the problem when they go to highs like this without a proper pullback. That can be a very violent reaction on the way down, and it can collect a lot of stop losses that would otherwise have held in a normal standard market. So just be really cautious around this level, I think. Hopefully, you've already been able to take advantage of it. We've talked about it to death over the last month, so hopefully you're able to get a good portion of that move. But just be wary that the leg that we've just seen is equal to the previous swing, and quite often that does signal either a bit of a correction or, at the very least, you'll start to see some consolidation here before the next move. But it's been fantastic.
And you'll see I've got a little bit of a red stop sign as there as well, because to me it has met kind of those partially parabolic kind of needs pullback in time, or even a pullback. Some levels to watch in the future: 2275 zone from a demand zone perspective could be quite interesting from gold. From gold to silver, Ty, we mentioned silver as well. I just left it up as it sat, because I think this was, I can't remember if this was one of our picks of the week, but certainly a technical that we've been looking at. Now, silver's done the business, and it's gone all the way to 28 straight away. You can clearly see I've left it on a higher time frame to show how good this move from equilibrium point to equilibrium point was. Now, you might think, well, that's done for silver. It's over. Yes, it's a major technical. I would like to see it accumulate or build a position now for a little while. But you'll notice that there's still some major levels open back from previous history. So silver's nowhere near its all-time highs. 34
No.
is has been a dream of silver bugs for a long period of time. But I always look at it from a different perspective. And I thought this was a bit of a tip for today's session, that maybe you're not doing the necessary analysis that can help you, which is to look at silver price in comparison to gold, basically to work out the ratio. Now, you'll notice that's been turning recently. So has silver been outperforming gold? In recent weeks, the answer is quite simply yes, it has. Was it absolutely underperforming? Of course, it was horrible. So where have we seen silver meet to gold in recent times? Well, the 0.013 ratio. So it kind of says that because gold's where it is right now, silver may actually have further catching up to do over the next couple of months if gold can hold its price or improve more. Now, of course, it's just a ratio, but I think this clearly shows you that silver as a portion against gold is actually maybe a little bit undervalued still by the markets.
Yeah, I mean, I look at silver on the daily chart, and I see an inverse head and shoulders. So, and if that inverse head and shoulders plays out, I think your $34 may well become a reality, because I think it's very close to the target price off the base. So, yeah, realistically,
No, it certainly
you're
puts it in
getting.
green sky, that's for sure.
Yeah, absolutely. Look, yeah, we did talk about it a lot last week. I'm glad that it did what it did, because it's let us down a little bit in the past, where it hasn't really tracked up as good as it should have with gold. But I think it's time to shine. It's now, and yeah, probably that $34 mark is probably a very, very good target. And look, you can see the inverse head and shoulders there. We've just drawn it. Very, very solid level, especially if gold doesn't have to go to 2600 to get silver to 34. It probably just really has to
No.
hold its price. All it has to do
Yes.
is hold up there above
Yep.
2200, maybe 2200, 2300, and silver can still get to 34. Don't worry about that. It doesn't rely on it. But what we
No.
wouldn't want to see, though, is a collapse of gold either, right? Like if gold collapses and it's back under $2,000, then we're going to see silver probably feel a bit of the pinch as well. So it is reliant on gold to an extent, but not reliant on gold actually going up. All it needs to do is really hold its position.
So here's another one that everyone's been discussing, and we actually first found this thanks to one of your questions in the community. It was only back earlier on in 2024, about this period here in February early, that we found a very nice trade that started all of this, and that is another inverse head and shoulders, another big turnaround in the smaller time frames, and of course it's for copper. So copper's becoming the talk of the town. Another one that's probably gotten a little extended because it is back at the resistance points here and has been doing a lot of completion. But the future could be bright for copper as well. So copper is actually still in a bull trend, and we're waiting for this to maybe find some accumulation later on. But if you're in it, again, the trend is still currently up with a series of higher highs and higher lows. We'll move over to oil now, Ty. Now, I think oil's starting to struggle a little bit. Everyone's talking about this, even more so than gold. I feel the energy trade has been discussed. And in the recent weeks, we've been talking about the idea of an 88, 87.50 strike for oil to move through. We really liked it here. We loved it here. And the movement from here to here is a common kind of equilibrium style move where it moves through what has been really nothing on the left-hand side in terms of structure and makes it to the next level. So 87.50 was tagged this week and last week. And I think that oil, again, might do a little bit of consolidation here. You can see it's starting to struggle coming off. Where are the key zones, though? So this one does have some market structure on it. I'm liking reactions off the 84.50. And if this type of thing happens, I would say that's actually quite bullish, where the market comes down and retests the 84.50, which we know at the moment is demand liquidity. And if the market then bounced through that level and broke to a new higher high, then it's really signaling that there's further strength on the horizon. So I find that US oil in particular looks pretty good on the charts. And it's really starting to signal that if we do get this type of scenario over maybe even the CPI numbers today or the next couple of sessions, that it's got more in it. But it also could, fail here as well and keep moving down. And I think next stop for it is this heavily traded zone of 83.15 per barrel. So oil certainly becoming more of a day trader and scalper paradise than necessarily the long hold or the medium swing hold, as it did reach that level of equilibrium for me, Ty.
Yeah, it's already reached it. That's right. And I think that the pullback levels are just as good on this. I'd be happy to take it either way. I'm not really biased as to which way it goes. I think both of them are solid trades. Up to the 88 or down to even the 82.50 would be sufficient. I think there's good trading action. Anywhere above the 82, I think, is probably still enough strength to say that it can go up. I wouldn't want to be seeing it under 82, but that's going to take a pretty serious move down. I don't think that's going to happen anytime soon. But that would probably be convincing me that maybe the uptrend is over for it. But my gut feeling is it's probably going to see a 90 before it sees a 70 again.
Yeah, I tend to agree. Obviously, we've got 90 before 70. I was like, well, which number are we going to get? But you actually went even deeper than I thought you'd say. I thought you'd say maybe 80. Here's the series of daily 20 moving average hits as well that we've had along. And you'll notice that heavily traded zone also marks up with the 20. So again, this is where I kind of envision a more heavy sell-off, finding maybe buyers. I like this watch reaction here level. And if we do end up getting the scenario I said before, I think from a technical level, it does present some opportunity to the upside. We'll see whether it manages. Of course, it all really depends on how this CPI number is going to be interpreted by the markets. So before we go into the dollar, Ty, and I know you have a currency trade for your pick today, I wanted to go through my trading pick for today, which has been one that we've focused on several times. And you can trade this, of course, on the Pepperstone platform, but this is the Hang Seng index. And I just thought I'd load up the major Hang Seng here. And you can see that we've been making a series of higher highs and higher lows for quite some time. Now, something fairly big happened over the last 24 hours. We closed a daily above the 17,000 level. Now, you'll notice that it struggled there once, it struggled there twice, it struggled there 3 times. It's been a major little level of supply resistance. And I feel like the strength of this candle closing near its high, because remember, closes are key, is kind of signaling that this market has done its small amount of consolidation and maybe it's ready for further moves. 18,000 is the next logical technical level. You can see here the very close structure. And it's been a strong one for us this year, hasn't it? It's really counter. I noticed Fitch, I think, downgraded China today. You might think, well, that's terrible. Oftentimes when you get huge downgrades from some of the biggest houses and the price action's bullish, that's probably not the worst thing in the world.
Yeah, that's right.
But they have been downgraded and I'm not minding this chart.
because sometimes there's fearing that the downgrade is going to be worse than it actually is. So when they actually do announce that it is downgraded, sometimes the result isn't as bad as the market might have anticipated. So the unknown is actually far more painful to the market than what is known. So once it is known, it's able to continue on. And look, I like it. I think that 18,000 is a really good level for it. It's actually been very technical, as technical as all the other indices, to be honest. You're able to trade it very, very efficiently, and levels are very easy to predict on it. No, I agree. I think this next test of this level, I know it's failed 3 times already, but I think this one, it's pulled back to a really nice level. It's got enough momentum kicking it up. It's hitting it with force this time, and I think that's generally what we like to see. A pull back down to a 20 moving average, and then a force attempt at getting up again higher gives me a lot more confidence that the momentum is actually still with the bulls here. And if it does break through there, I think it can move relatively quickly to 18,000.
Yeah, this is a very sentiment-driven market. So if you've never traded or looked at Chinese market or Asian markets in general, oftentimes when sentiment shifts, they can get pretty aggressive pretty quickly. But it's a good sign. It's been a little bit of a slow mover from some people's aspects. To me, this is the kind of nice ebb and flow of a good technical analysis
Absolutely.
chart. And I
Technical
love it
analysis,
because you've got here the dojis as well, which shows this equilibrium of the market. Well, isn't this more of a decision made? Let's go to the next level, hopefully. So that's my one. Let's move over to the dollar, though, Ty. We always talk dollar, then we'll go euro, then we'll go your pick. And actually, I'll just quickly mention VIX here because the VIX closed above 16, which we mentioned last week on the show, and that shows us that volatility is back, baby. And yeah, it's the first closure above 16 all year and ever since the October lows. So I think this is showing that the kickoff of earnings season is going to be very exciting for markets, and it's great to see that vol coming back in for all of us as traders, investors, whatever we are out there. It's sometimes nice to see a bit of volatility so that you can get opportunity. US dollar. Now, I would say I am partially confused by this chart. I'll be real. You know why I'm confused? Because I feel like the market's confused, Ty. Long leg dojis sitting right around the zone. Yes, the trend is kind of up on the smaller timeframes here on the daily and stuff, but it's starting to struggle a little bit. I don't know which direction this is going in. I feel like it's a news-based trade, and then we'll get a direction. But how do you see the dollar? We haven't discussed this one today.
Yeah. Look, I still feel that it's going to go to 105 and break through 105 proper. It hasn't done it yet, but what it is doing is it's doing a very, very good job of holding 104 and around that sort of 104.20, which seems to be the key level for it. While it's doing that, I'm going to give it the benefit of the doubt. I'm not going to be impressed at all if I see a 103 something. Because at that point, I think you've really got to let it go. But while it's holding on for dear life at this level, I think there is still enough sentiment there to say that, look, the 105 is an obvious target to go for, right? Like it's already been there twice in the last little bit. So that would be the target zone. But really, the trade's the euro on the short, right? So it seems to me like it wants to go. But yeah, the 20's hold, it's doing its job. And while it's doing its job, I think we've got to give it the benefit of the doubt. I really do. I'm just not prepared to write it off yet.
Not prepared to write it off. Okay. So we're going to go with, I guess, dollar does have some bullish properties on it on the higher time frames. News will ultimately be the decider. A 104.84 breakout, we think, exposes the potential of a 105.80. And when you're moving between equilibrium zones, that can often give scalpers a little bit of opportunity in the smaller time frames as well. Similar to what's been happening with gold and oil. We often do this top-down approach to help everybody so that when we can see these key levels, when levels are broken, they often move to the next level. I call it equilibrium to equilibrium joint. And that's, to me, or position to position, whichever way you want to look at it, market structure to market structure, doesn't really matter. They're all the same thing. And yeah, for us, dollar index is happy where it's at, but it still has that tinge of bullishness on it. Let's now have a look at the euro US dollar then and load it up on the Pepperstone platform here over on TradingView. Obviously, if you want to use any of the Pepperstone platforms, you can do so by signing up, and TradingView is a great choice. And there's plenty of opportunities as well as so many platforms that Pepperstone offers, which is awesome to always check out. But here's the euro. Now, generally speaking, if it's US dollar up, we would see euro weakness. We've talked about this a lot on the show. Last week, it managed to actually break above. So we can see here, it broke above this key level here. and then it pulled back, giving a pretty good op. Now, the best trade I thought was actually this one here for the little bit of bullish action. I like that quite a lot, and I really like this one as well. I was hoping that this one would come back a little bit more. I was looking for this demand to be a little bit more structure for a buy off because it was looking towards the strength. It looks a lot different in some ways to the dollar index, but when we put it back onto a chart and we bring it back out, you'll notice that it's still within an overall range bound market between the low over here and the highs over here. And we are right smack bang in the middle. I'm going to look for dollar to make a big move here on before I even go to the euro. What do you think, Ty, on this one?
Yeah, no, I agree. I think we have to wait and have to be patient. I think that my preferred trade is definitely to short the euro from here. Not to the extent that it's going to get back down to like parity or anything silly like that, but I think that the 107 provides a very fair value and a good platform to go along. And that's probably would be my target. I think that if we can get that little bit of weakness in the euro, which is obviously going to have a strengthening US dollar, I think that the 107 is a really, really good target to aim for. And I think you can get there very, very quickly. So that is my preferred trade on the euro. But hey, you know what? We trade what we see. And if the dollar starts to sell off and the euro starts to pick up a little bit of steam, it really opens up that 109.80 to the 110.50 again. Like the euro can move up there very, very quickly. Even though we've got a preferred bias of what we want to see, I would be very happily taking part in that long as well. Don't worry about that. It's it definitely is technically sound if we get the breakthrough. But I think at the moment it's in a bit of a holding pattern. It's going sideways, albeit a decent range, but it needs to break out of that range before we can really make a decision. But look, rather than preempting it, I think let it break out, and then when it does, we jump on the train.
Mm-hmm. All right, let's move over to your pick of the week. So which one have we got this week from you?
So I want to focus on the US dollar yen this week because it's doing something that look, it's a coiling effect. There's no question about that. If you look at the range looks very, very tight. It's about 80 odd points. If we go to the daily for now, obviously actually start with the weekly. You can see the weekly's obviously got three very significant highs that we're at right now. We're at the third one right now. We've had a good pullback to get to this level. But when we go to the daily, what it really starts to expose, we have to actually blow it up a little bit so you can see it. We've got what is considered a pretty tight range. We've got a lot of wicks, as you can see, on a lot of those candles. But the last effectively 3 weeks of trading has been in a very confined space. Now, confined spaces are only important in the context of what they've done previously. And what we can see previously here is a big, very large 3 or 4 day move to go basically from 146 all the way to 151. You're talking about 500 pips, right? So it's a big move. And now that we're seeing this consolidation, it is really peppering the breakthrough of that 10. Well, it's basically 151.80 to 152 is the level that we're trying to break through here. I think that there's an opportunity on both sides, and I like trades that give us both sides. Now, look, a lot of the time we look at a chart and say, I would only trade the short on that, or I'd only trade the long on that because we've got like a technical bias as to why. This is one of those ones where I really have absolutely no bias whatsoever. I would be very, very comfortable taking the break of either side of this trade because I think that a short is just as potent as a long from this level. So while the 20 moving average is holding everything up and basically keeping it above that 150, I think that we're looking for a break above the 152. If we get a daily candle above the 152, that breaks through, that could see the next big move. That could take it actually all the way to 154. I think it's a decent move from here. I'm not expecting only a small move. It could be quite a significant breakout. But that said, a breakdown below the 20 moving average and below the 150, I think it could be at 146 in a heartbeat again. So I'm seeing a good move, but I just can't actually tell you which direction. But at the same time, I would trade either direction equally and with as much confidence because I think that when the market sets up like this, especially at a point of very strong resistance, it's coiling really for a move, Tom. We know how the coil works. Like the coil, the longer it coils, sometimes the bigger the breakout's going to be. So I would be setting alerts. If you want to trade this one and you want to play the game from a daily swing trading type scenario, set your alerts and set your boundaries in effectively the time frame of the last 3 weeks, the high and the low of the last 3 weeks. You can play inside that zone. But once we get a daily break on either side of it, I think the action will start on the end. So one that might give
We're
you a
looking
bit
for
of
a daily close. Is that right?
got to be a daily close. Yep, it needs to be a daily close.
Okay.
And
All
the
right.
reason it's a daily close is because the consolidation and the linking that we're seeing of the coil is on the daily charts. That's why we really want a daily close to really break through that coil. Going anything smaller might just give you a bit of a false breakout. That's the only problem
Yeah.
with the
And a good little tip as well for understanding false breakouts would be, see over here, we've got this candle. Now I've marked that, but really the closures are here at this stage. You'll notice that the closures are tight within these ranges. Notice this one actually got quite low. So where do you put your support for this? Well, for me, it's probably more around the 151 day close, because that would also go underneath the daily 20 at the same time. So it's a
Yeah.
it's a good little tip that if you're wondering, you need to jump up and down through the timeframes to understand the structure of the markets a little bit better, and that can really help you out. All right. Well,
100%.
I guess it's that time of the show again, Ty, where we ask the audience if they have any particular charts they want to get analyzed. So, of course, if you're in the chat right now, first up, give it a thumbs up if you enjoy this type of content. But also feel free to ask for something and we'll have a look at it together right now. I'll start off with my own pick because I feel like it. And we'll go here with Tesla, because this stock has started to turn around from the lows. Now, I liked this possible return point a long, long time ago. It came down, it found some buyers, it rejected that, it came back down. And I think that this was a very negative session for it. So you'll notice the increased level of volume. And then what happened was Elon Musk has kind of come out and he's started saying, don't worry, guys, robo taxis are coming, just wait till August. That's kind of the catalyst that a lot of retail traders need. So it's really a mixture of oversold kind of metrics. The market's starting to look a bit sidewaysy. And as you know, Ty, the market loves going into oversold kind of stocks when that happens, because generally a lot of people don't understand this. Funds have to be partially invested in the market at all time. But one of the ways they get defensive on markets is sometimes going into the laggers, don't they? And if it's been consolidating for a while, they jump into those, they buy some positions, because really how much more is it going to sell off if they deem it to be still fundamentally okay? Either way, there's clearly somebody starting to pick this up. We're looking at that 182 level from a double bottom perspective, because of course this is a low, this is a low. But I did love that trade off the low here. I thought that there was a chance that this would actually find a buy the dip. And in this case, it did. It's a risky trade. You lose a lot of them. But when you get one, sometimes the reward is pretty plentiful. So it's kind of nice.
Yeah, it's doing a really, really good job of convincing everybody that the momentum is starting to pick up and strength is picking up here. And it hasn't got a lot more to go before it convinces me too, Tom. I'm not going to lie. So I do like
yeah, I know you didn't look at that chart, but now you're loving it.
it's doing a good job of convincing me. I'm not going to lie.
Yeah. There we go. There's the Tesla. So, yes, we did miss out on Bitcoin. So let's quickly cover this one. This is coming in from Motivation to Wealth. Thank you very much for joining us here, Motivation. And he basically says, Bitcoin, I need it now. All right. Now, you're not going to love my response to Bitcoin, because I feel very passive on this right now. Now, there were a couple of levels that I was very bullish on it, which you can see was around this 64K zone. That was a nice fib. So I'll just show you what I was doing there. I was actually grabbing a fib from here to here. It was a great golden pocket trade towards the upside. I started to certainly get a little bit more negative on it around here from the resistance standpoint, and we are still trapped within two ranges. So for me, it's hard because we have the halving coming up, which for anyone that doesn't know, I think it's 19th of April. I don't know. Someone in the chat can fix that up for me in terms of time. Definitely search it, because I'm not sure that's the exact date. But the halving is coming. Markets traditionally usually sold into the halvings, but price action must actually show us that. So at this stage, the trend on the high timeframes is, of course, still bullish. The market's doing a pullback in time, which is a coil market. So there's nothing wrong with that. If we get back down to 63, 64, I'm not so bullish on it. I actually think there's a chance of breaking 60. And really, the more logical trade in the future would be underneath 60 to see that 51, 52, because there's nothing holding a sell that would go through here. And traditionally, Bitcoin loves its 15% and 30% sell-offs. And so far, the most sell-off we got was around that kind of 15 to 17%. And it just so happens that if this goes from a high all the way down to this level, it'd be 30%. So we'll find out what's in store for it. Ty, I don't know if you have too many opinions on this chart. To me, it's just very difficult to read. Even this demand, you'll notice it isn't acting like demand at this stage.
I think right now it's really setting those levels. I think a break below that 61, I agree. I think it can get to 51, 52 in a heartbeat, knowing that how it got there
Yeah,
in the
under
first
that.
place. So
Yeah.
you'd be very brave to be fighting against that. I think the 15 and 30% phenomenon, if you like, if you want to call it that, has played out so many times that it can't be ignored. I think, and it's one of those ones where I think I'd just be sitting in an alert.
So yeah, I'd just be setting alert. There have been some great trades. Don't get me wrong. There's been a great long in here, fantastic long here, fantastic long here. I've liked a lot of trades. Even the short that happened in here wasn't too bad, and the reshort here. But in this point, it's starting to get a bit thin. So I'm going to go with neutrality at this point on Bitcoin. Unfortunately, I know it's not the answer you want to hear from us, but it's the way I'm looking at it from a technical perspective. Victor asks pound US dollar tie. So let's have a look at the Great British Pound USD. Now, this one here is a very interesting one. Effectively, we have a market that's been quite bullish in recent times against the US, and it made a low high, lower low, higher high switch, which to me, like if I was looking at it right here, I would have been quite bullish. In fact, I'd be very bullish at that perspective. So, pound completely reversing what some of the other currency markets are doing. I like the long more than the short here. Now, I have absolutely no idea what's going to happen to the dollar index, but from what I'm seeing on these charts, I mean, this is exactly the type of sequencing that generally for me gets me excited. And if I was here, I would have been bullish. At this point, I guess it's harder to call anything, but this would be there's nothing really here on terms of structure. So there's a chance that we get back up to the 128s. We'll see how CPI plays out.
Yeah, I think there's a lot depending on the CPI play out, to be honest.
Yeah.
Right. I think the momentum could carry it through there quite easily, actually.
Mm. It
Yeah, it's a
looks
good
kind
level.
of similar to the Aussie as well. I've been watching the odd USD, if you put it in correctly here. And the Aussie has been also trading quite bullishly in recent days, in recent sessions. So it came off that low that we had sequenced out. It made a new higher high, and it's kind of been rallying up. It's at resistance, though, coming into the CPI numbers. Lincoln asks MSB, which is a Mesoblast, I guess. Look, we don't usually cover those types of stocks, but I assume it's Mesoblast that you're talking about. It's an Australian stock. This one here is just flying off news more than anything else. So is it doing well? Absolutely. It's not really a stock that we generally do cover on this particular show, but you'll notice it's quite patchy. And the thing with Mesoblast is it sometimes goes on ripping trades. Sometimes it just gets brutalized. So I'd say this is more of a generally in news trades, Ty. I always look at it as psychology numbers. How do you do technical analysis in news trades? A good rule of thumb is to start thinking about looking at the actual orders themselves, focusing in on just before those kind of $1 levels, 150s, twos. It's not a penny stock, but it does trade kind of like one.
Very difficult. Very difficult trade, to be honest. From a
Yeah.
technical standpoint, it makes
Yes.
not a lot of sense, actually. And that's why we tend to avoid those ones. Ideally, what we want to be seeing is technical structure to actually be able to trade. If you can't predict it through what's happened in the past with technical levels, it can be a little bit of a guess and check. So that's why we
Yeah.
leave those ones alone a little bit.
That's right. Yeah. Euro yen coming in here, Ty, from Trevor. Probably enjoying the upward trend, I would say, in this one. It just seems like 2 steps forward, 1 step back, generally being pretty bullish at this stage. Your thoughts?
Yes, I like it. Look, it's at a very key zone now, obviously, but it's been a bit of a party on the way up there, that's for sure. And
Mm.
yeah, look, so many things that we've looked at tonight, Tom, are at a very, very important zone. And I know it sounds probably a little bit repetitive for what we've been talking about, but there is a reason for that. And when we're about to see, some significant moves or volatility start to come back to the market, it affects all of these markets, currencies, indices, and everything. And I think that a lot of them are positioning themselves for the next big move. This has been a really good move all the way up to this level, but yeah, I've got to say it makes me a little bit nervous around this level, mainly because it's obviously at a very, very heavy point of resistance.
Yeah, heavy point of resistance. Trend still up in the high time frames. Monthly, weekly, daily. No one would probably say it's negative looking. Resistance on 2 hour chart here we can see. So CPI data again probably going to shake it up. If it gets to new highs and cements them with closures, then who knows? It's in price discovery at that point. So you'd be usually what I would do is use fib extensions to try to figure out where the market's going to move to next, and you would take these levels and extend it out from the fib. Avo's got one last question for us here, Ty, which is just basically, did we cover bond yields and how they can be calling out no landing, soft landing while they are still inverted? So a bit of a loaded question there. Basically, if you've been tracking yields, whether you're looking at the 2-year yields, the 10-year yields, the 20-year yields, the fives, anything like that, they all have been rising up. Now, generally when yields go up, it shows that there's a fairly robust economy actually, and that they have to cool it by obviously raising yields up to try to stop it or slow it down. At the same time, Avo's question is, how can we be inverted? Now, an inversion is where we have the shorter date yield inverted against the longer date yield. So this is what they call bond yield inversion. And you'll notice that we've been inverted for a very long time. We first inverted back here in 2022 during April, and we've stayed inverted now for a very long time. So basically 2 years of inversion. Now, this is pretty rare. It doesn't happen very often. In markets, generally, it's not the inversion itself that you need to be terrified of. It's when it uninverts and stays uninverted for a while. So if you actually go back through and you track previous times of market turbulence, a lot of the time it's actually when it uninverts and uninverts for a while. So we inverted back in September of 19. Obviously, we know what happened. I think actually the market was already setting up for something a bit nasty. We also inverted in 2007, and we all know what happened in 2008. We also inverted in 2000 and before that. And we stayed inverted for a while, which was a bit of a warning sign, what's going on here. But it wasn't really scary until it uninverted. So does it mark soft landing, no landing, any of those things? I always say it's speculative until it's always speculative. But at this stage, we're still inverted. So history, at least history that we can see on the charts, would tell us that we probably can't be thinking of that scenario just yet, can we, Ty?
No, not at all. It's one of those ones where, look, history is good to have a look at, but really we have to obviously concentrate on what the market is giving us right now. So difficult to really label it like that until it actually happens. It's quite often, isn't it? Until it actually happens,
Yeah.
It's not a good guide. No.
No, so that's at least a little bit of the rundown. Avo does says, you know me, I'm a perma bear. Well, if you're a perma bear, then you're looking for the reason, but I don't think we've got the reason on this chart necessarily.
Not just yet.
I guess we'll do one here for Michelle just because she's been in the chat the whole time, Ty. Let's do it. CLSK, Clean Spark, which is again just like a single stock here. It's not probably that heavily traded by anyone in the chat, but this in general is totally different to what you're seeing on the market. It certainly has been taking a little bit of a hit. It is a $3.46 billion company, but I guess the way that I see it is it's coming down to a level of previous support. It's coming down like a freight train. I don't usually buy freight trains like that. We often say that it's better to buy the V component than it is to buy the dip. And I would say that still looks dippish on the way it's traded recently. Is it a support level? Yes, but I'm sure you would want to see a bit more structure, Ty, and then hopefully some actual turnaround before jumping on board.
I'd like to see it turn around a little bit more before I'd get excited about that one. Look, there is a level of support there, but to me, at the very, very least, it needs to be trading above the 20 moving average again.
Yeah, which would also tap into that 18 zone, which you can see is also the wicks. So clearly some level of supply going on there. All right, everyone. Well, from all of us here at Pepperstone, thank you so much for watching. If you do enjoy this content, please remember to give it a thumbs up. We do it every Wednesday at 8 p.m. So make sure to subscribe. Links in the comments down below as well, so that you can always be notified when we go live for these. We cover the markets that are the hottest at the moment, and we obviously cover them in quite a lot of depth and detail. So do make sure to put it in the comments. Let Pepperstone know you enjoy this type of stuff so we can keep bringing it to you. From myself, Thomas Atkinson, and I guess, Tyrone, you got any words of wisdom? I guess I would like to say have a great week. Be careful of the CPI and the FOMC. But Ty, any words of wisdom to leave everyone with today? You might have frozen, guys. Okay, his words of wisdom are He's frozen. He's terminated on us. All right. Thank you very much. We'll see you next week. Bye for now. Catch everybody.